Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management. To be or not to be, that is the question. The B standing for breakout, of course. As of the close last night, Thursday, the Standard & Poor's 500 and the NASDAQ 100 were 1% and 2% respectively away from reaching their powerful key SVA breakpoint support resistance levels for the market. These are the super growth price for the Standard & Poor's 500, or 3.5 times adjusted book value, and the bubble price for the NASDAQ 100, or 7.4 times adjusted book. Breaking over those levels would definitely imply higher prices for both indices, and of course, an ongoing bull market of some magnitude would be implied. However, I would expect to see some stalling out here. Whether or not this is the peak for the market, and it is not any surprise to see the FANGs are stalling out here, at least for this moment as well. Well, what can we suss out by looking at the FANGs? They have been the leaders in this current market rally, and we might, well, maybe, be able to get some hint of what is to come. As we will see in a moment, that's a nice thought, but as the song goes, it ain't necessarily so. Anyway, before we take a close look at those FANGs and what's been going on, as always, I do like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. Okay, let's start off with Meta, and Meta has clearly broken out over its low super growth price. That's 4.5 times book value, continuing a long and beautiful trend, and now riding that growth in the fair market value as Zuckerberg continues to add value to the earnings outlook for the company. NVIDIA has been riding its HB5, that's 26 times book value for some period of time, and is putting on a little bit of strength right now. I suspect, by the way, that the HB5, which is that 26 times book value, is probably a little overstated, and when we actually get the results, I think we're going to see it a little bit lower. And therefore, that will also mean it's a little bit closer to its HB6 price of 33 times book value, which is a 23-year high for the stock. Apple continues, I think, to ride along its HB6. That little turn up there that we see there is simply due to the fact that we don't have the very latest balance sheet following the most recent one in May. But I think with the continued buybacks, it's safely above its HB6, and we would continue to hold that stock very definitely. Now, if we want some promise, let's take a look at Alphabet, which has risen to its MSG price, 5.5 times book, and is actually at the present moment looking as if it may be trying to break out. Now, if it's going to do that, of course, it will need to stay here for a number of days and actually confirm that that breakout by what we call sort of a breakout pullback, which I have shown you many times in the past. But nonetheless, if we want promise for Alphabet and the market, it's right here. Amazon, on the other hand, is just kind of riding the market wave. It's risen virtually to its bubble price again, okay, from the breakdown test, and it's back there again. But I think unless the market itself is able to break out, then I think that that's probably it for Amazon. However, of course, because it's so close, we have to monitor it carefully. Microsoft is betwixt and between two breakpoints here, and there's not really much that we can add to the stock. It's got as much upside as downside at the present time, and at best it would be a hold. Tesla continues to ride just above its HB1 price. That's at 9.5 times book value. It did test that level when the stock broke its HB2, which is 12 times book. But as far as moving one way or the other, the stock is telling us nothing whatsoever. Now, the excitement, of course, of the week had to be Netflix. When it jumped almost 10% yesterday, okay, on news that it was doing well in the I guess in what we would call the advertising department. The problem, however, is that if we look closely at those numbers, they're not nearly as exciting as the market has led on. So we want to be fairly careful about getting too excited about Netflix right now. So what have we just seen? Well, first and foremost, there is no overall evidence that tells us with any certainty that the FANGs are going to be leading the market, the overall market, higher from here. Meta, Nvidia, and Apple clearly remain as buy holds here. And if in any way this proves to be wrong, their back doors, which is, say, their nearest support breakpoints, are close at hand. Stocks like this give me the greatest comfort when we are looking for an answer to the buy, hold, or sell question in a market which could go either way. Now, there are three what I would call uncertain stocks. If there is any stock which could be a source of optimism for the general market, it's Alphabet, which has reached up to and just now exceeded a key breakpoint, its MSG price, 5.5 times book. However, stocks that are breaking out need to test their breakouts, that is, the breakout pullback before heading, which I've described for FANG Friday viewers many times in the past 4 years of our broadcasts. So even here, there is some uncertainty. Nonetheless, it's promising. Microsoft is like the grand old Duke of York and his 10,000 men. It's neither up nor down, although I do admit that its AI fundamentals look more promising than not. Amazon has reached back to its bubble price from which it originally broke down in October of 2022 and tested in February of this year. I suspect that the shares would break out if the S&P and the NASDAQ break out, but there is no indication that either event, either the markets or Amazon, is in the cards. Finally, I have 2 weak hold sells in my FANG list. Looking at Tesla, after dropping one breakpoint, or 23% from its HB2 level, the shares have been oozing modestly higher, accompanied by some very contradictory messages on future pricing of their cars. The shares have continued in a slow uptrend, but are too far away from either support or resistance to render any sort of signal about the stock, let alone the market itself. Finally, Netflix gave the market some surprising and positive palpitations this week. But the reality of the market is that the promise of huge future growth in revenues from advertising are very much in the air. So what's the overall picture that I leave you with this week? The market has reached powerful overhead resistance, and the FANGs are not telling us anything about where they are leading us, if indeed they are leading us anywhere. Either a breakout or a market peak is at hand. Stay tuned. For now, this has been Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next Friday.